Hi there. Let's take a look at Polkadot. We'll look into the weekly Wyckoff structure and also check out the short-term trend so you can learn how to assess the risk of next price move, even if you're new to chart analysis. From a weekly big picture perspective, according to the Wyckoff Method, it is now currently in the stage of what I call a testing phase because there are many different names during the accumulation cycle. You can call that second test and then later subsequent, I don't know, third test, fourth test, and eventually there's also one called a spring. It's something I call a final shakeout before the price shoot to another round of distribution cycle. So this is the testing stage. Polkadot is in. And after a few weeks of seeking lower and lower all-time lows, last week brought Polkadot back to the red key level of 0.97. When we get to the daily chart, we'll be able to see how the price is actually moving in detail. Remember, this is education content only, not financial advice. So the immediate resistance or the major resistance in the weekly level remains 0.97. So you see last week, it came to challenge the line, but failed to stay above. And now this week, it is still being suppressed by that line as of this moment. Volume has been declining except last week. All right. Even this week, there's still about 3 days left. So let's see what the remaining 3 days will do to Polkadot, whether the volume will resume to last week's level or would it stay as low as the previous few weeks. All right. So there's no particular trend other than the gradually less steep decline that we are seeing, which is I consider a positive sign because it's not like dropping crazy. The rate of descent is actually smoothened out. And the next stage we're looking to see is sign of strength. So if you're new to my sessions, this stage typically comes with higher than average volume and the price goes back to challenge the previous level set by the automatic rally. So in this case, if I haven't marked us wrong, okay, that's the orange key level of 5.15. Sometimes we would decide too quickly and mark a stage that's probably not the case because you can see in this pattern, there are 2 times you can mark. So where I put the second test can actually be the selling climax and the automatic rally will lie to the right-hand side instead. Okay, so that kind of situation can happen, but the key is that you understand it has gone into the accumulation cycle because we know there are more tests to come. So whether or not you miss the first bounce or the market late, it doesn't really affect a lot. Okay. So now the daily view. Once we enlarge it, we can see. So it got to the point where we said around those dates, we'll get confirmations where the bulls and bears want to head to. And it indeed broke outside of the falling channel. And you see when it came back, when it dropped back, it tested the channel ceiling and bounces back up. And it is now staying between the channel ceiling and the 0.90 resistance. So these yellow lines are shorter term levels based on recent trades. Okay, so you can consider if there's no crazy news coming out, the range bound between 80 cents to 90 cents, it's something normal. Okay, of course, it can go as high as to the red key level of 97 cents. Okay, that's what happened just a few days back. So these kind of moves are pretty normal. Looking at this, there's currently no particular trend going on. Just that if there is really a descending trend, with a resistance line, if I line up the candles of the last 4 to 5 days, not including the wick over here, okay? Just mainly where the closing, not closing, that one was open, closing price over here, and then the wick over here, and the wick of today, not the spike over there. Okay, if this is really a downtrend, in the next few days, we will be able to see the price continues to be suppressed. But I also mentioned tomorrow is actually the day where the US Fed chair is going to make a speech. If that's going to imply anything that affects people's sentiments to risk on or risk off mode, these yellow dashed lines won't be able to hold the price actions a lot, right? It's mainly the key levels that are going to matter. And remember, this 75 cents is where the short-term support is during the all-time low exploration period since end of July. Okay, if you go to the left, there's nothing for Polkadot at this level. So from 75 cents to 97 cents is the broader range outside of the 80 cents to 90 cents. So that's where I see it is potentially getting into. And if I extend this, you see the blue line forms a descending wedge with this yellow dashed line. If the trade really trends towards that wedge, let me draw the date tag over here. That's pointing towards 4th of September. So textbook theory, okay, not always 100% correct because you can find exceptions. Textbook theory, a descending wedge is a bullish sign. So let's see whether this time the textbook is correct, okay? If the next few days really continue to trade between those two lines, okay, finding support from the blue, but getting resisted by the yellow, then when we get closer and closer to this date, we come to the 2C's decision points, all right? If you're new, the 2C's framework means continuation or change, okay? Continuation means continuation with the current, most recent short-term trend. In this case, it's a downtrend, okay? And it has to break a resistance in order to change the trend, right? The other is change of trend. Oh, sorry. Continuation is continue with the downtrend. It has to break the support in this case because it's going down. Change is breaking the resistance, changing from a downtrend to a sideways or even an uptrend. So there are only two options, no third option. That's why we call that the 2C's decision. Continuation, breaking support, or change, breaking resistance. All right. So that's the case for Polkadot right now. Unless, it goes back to the descending channel or it breaks out and eventually trades sideways. Otherwise, the next few days, again, no surprising news from any of the large economies. That's probably where it is going to be, the playground for the bulls and bears. Let me know what you think, whether it is going to break outside of this descending resistance line, or is it going to break the support and go challenge the 80 cents. You can access this video earlier, like the current channel members, so join them now. See you in the next one. Thank you.